All right. Joining me is James Seyffart, Senior Research Analyst with Bloomberg Intelligence, who everybody knows James. He's simply one of the best resources out there on all things crypto ETF related. And I like checking in with James, a couple times a year to sort of get a sentiment check on the crypto ETF category and really hear how he's thinking about everything moving forward. And so, James, thank you for joining me. How have you been?
I've been good. You're pumping me up here. Thank you for that. You're a little too kind, I think. I will say though, I'm following two of your most recent episodes that were really good. You did the survey from Bitwise, and then you did, which was awesome. Matt, I mean, the Bitwise guys, Matt, it was great. And then Thorne last week going over what's going on with market structure and the Clarity Act was just a clinic. So I'll hope to hold a little bit of a candle to those guys, but I doubt I'll be able to do it.
Pressure is on, but I
Yeah.
I have faith in you. I think you're going to be able to do it because again, you know crypto ETFs as well as anyone. And I guess a good place to start. We were talking before I hit the record button. I mentioned getting sort of a sentiment check from you, and I don't know if it's just me. I feel like the crypto ETF space hasn't been quite as exciting recently, and maybe that's because we don't have all of the hype and build up like we did around the approval of spot Bitcoin ETFs a couple of years ago and tracking that circus. I would say it was a somewhat similar situation with the spot Ether ETFs finally getting approved. And then you think back to even last year, we did have these generic listing standards from the SEC, and we saw the launch of Spot XRP and Solana ETFs. But I just feel like from a pure excitement perspective, we're in a bit of a lull right now. Do you feel that at all?
I 100% agree. It's very lull like. Even if you like look at the flows, like we kind of everything kind of went into a lull. Like we had a huge drop off. It was still exciting from October until I'll call it November, just early December area, and ever since then it's just been sideways and a lull. Very boring. So yeah, that October 10th blow up. Like if I look at all of my stats and ETFs, and like peak flows, peak assets, they're all within a week of that date. So things are still just kind of nothing has really recovered from what happened then.
Yeah, it almost feels though too like crypto ETFs made it, right? They finally got over most of the regulatory hurdles and they made it to market. And so now the question is, what's next, right? Like the SEC gave everybody mostly what they wanted. I know not everything. And so it's like, where do things go from here? It's time for crypto ETFs to prove it. I kind of feel like is where we're at.
There's also just so much other stuff going on too. I mean, you just look at what's going on in the precious metal space. That's definitely like taking over. There's a lot of stuff going on geopolitically. This is just, it gets pushed to the back burner in anybody's minds, I think.
All right. Nevertheless, there are still things going on in the space. And so there is actually a lot I want to get to. And I thought we should start with this current heaping pile of crypto ETF filings, which, again, you definitely track these closer than anyone out there. And I saw back in December, you tweeted out a chart that showed there was something like 125 crypto ETF filings with the SEC. Do you know where that number stands at the moment? And I know this can change by the day, but do you have like an approximate number?
Yeah, I do. So I actually went through and updated some of this earlier this week. To be clear, also I'm probably missing some. So like when I post about some of these, they're like, "Oh, you missed this one thing here." So last time I posted it was 124, and I was actually missing one. It should have been 125. Right now, my number is probably around 152, 153, depending on how liberal you are with counting that, because there are a lot of products coming to market that are like, "Oh, there's a little crypto," but like Bitwise is launching one that's going to invest in other real assets and currency debasement hedges like precious metals and things like that. Does that count as a crypto ETF? Probably not. Um, but so yeah, the number's well over. It's over 150 unquestionably at this point. Is the
And
answer.
are all of those, do they hold some form of spot crypto, or does that include, options based products and those sorts of things?
That includes the option-based products. So a lot of the filings are like those income-based products on Bitcoin or buffer, some sort of volatility dampener, or anything along those lines. So I mean, these issuers are going to throw the spaghetti at the wall this year. I feel like they're going to, whether it's a buffer product or some sort of covered call type product or single stock or basket products. I'm pretty optimistic on the demand potential for basket products over the long term. So yeah, this includes all of those things. But it's a combination of just the pure spot, what we think of trust exposure, to the 40 Act products, which are often get to market a little bit sooner, and some of those will hold some spot, but they'll hold derivatives and futures or other ETFs in many cases that have been filed as well.
Now, we should mention just because there's a filing out there, that doesn't necessarily mean the ETF will launch, right? And so, do you have any expectations around how many of these will actually make it to market? And we don't know for sure, but as you look at this 150 plus, like what percentage of those do you think actually launches at some point?
Well, I think we'll see like something like 150 launch this year. Of these 152, I don't know, because when I updated that 124 number, that was like mid-December, right? And so we've since added like 27 to 30, 25 to 30 new products that were filed just since mid-December. We're probably going to see a lot more filings throughout the year. So if we don't see, 100 something crypto ETP products launch in 2026, I will be absolutely shocked.
And for the products that hold spot crypto, generally speaking, do most of those fall under the generic listing standards that I mentioned earlier, or is it a mixed bag? And maybe you can explain what that would mean for when these ETFs might launch, right? Because there's going to be timing differences in these, whether they fall under the generic listing standards or not, if it's a new novel, crypto asset.
Yeah, I mean, here you are asking the important questions. Um, I guess I would say not all of them are explicitly fit within the generic listing standards, but I think ultimately they will, because part of the problem is you can launch those 40 Act products without the generic listing standards by holding other ETFs and doing other things to get exposure. And by de facto, those ETFs launching, theoretically, the other ETFs could qualify under the generic listing standards, because you can't get into a situation where you have an ETF that offers exposure and then you end up with the same sort of simulation where Grayscale sued the SEC saying you can't allow a derivatives product of the same asset, but now you're not allowing us to provide a pure spot version of this. So I think two things. One, I think the generic listing standards, they need to be a little more strict around like things like volume and issuance. I think I've said this on your show before, but like I think they can probably revamp it and get a little stricter, which is kind of insane considering my view over the last like decade with how they were handling this space. Um, so yeah, I think ultimately the vast majority of these things are going to come to market. That doesn't mean they'll be successful products. One of my other calls over the next, we'll say 2 years, because it won't necessarily happen in 2026. Like I said, we're going to see over 100 plus products come to market in 2026 is my guess. Maybe up to 200, but probably not that high. We'll see. But we're going to see a lot of liquidations. Like people are So Eric Melchunas, my boss, will cover this, and he's like, "Look at this filing. I've never heard of this token. Like they filed for it, and 99% of the time, I'm like, oh, well, I've heard of it. Like I know what it is. I know what they're doing and stuff like that. But some of these more recent ones, I'm like, I've literally never heard of this one, and I have to look it up. So they're digging really deep into the bucket here. And honestly, who knows? Like some of these tokens, I'm not going to pretend to know what's going to be successful long term. It's kind of like picking, internet stocks in the 90s and early 2000s. Like you're throwing a dart at a board in many ways. But yeah, there's a whole bunch out there that I literally had never even heard of, and I can't imagine all of these, particularly ones if those names I just mentioned where they have like 3 different filings for them from different issuers. I don't know, man. I can't see them all getting assets and being profitable for the people who have filed them.
Yeah, you probably heard me talk about this before, and I don't think this is anything overly enlightening, but I have this basic theory or framework that spot crypto ETFs, they'll generally mimic the underlying market cap of the coins themselves, right? So, say, for example, there's some random coin that has 1% of Bitcoin's total market cap. Well, then I would expect the ETF for that random coin to do about 1% of the demand for spot Bitcoin ETFs. And I think it comes down to, is that 1% for that random coin or whatever the percentage enough to keep the ETF afloat? And so I think you make a good point here that we're going to see this again spaghetti cannon of products, shot at the wall, and we'll see what sticks. But it's going to be tough sledding for a lot of these. I don't know that small percentage is going to be enough to keep them alive.
Yeah, and honestly, they should be throwing spaghetti at the wall, because some of the ones that have filed, some of these other altcoin ETFs, the ones that I thought might have some success and garner some assets really didn't, and some of the ones that I didn't think had any shot have actually gotten to a point where they're probably profitable for the issuers. I mean, you've had Steve McClurg of Canary on before, like their H-bar product has done pretty damn well. If you look at it, particularly if you adjust a lot of these things, like you were saying, on a percent of market cap basis, everyone in the crypto world thinks they're like an ETF coming means they're going to see the amount of flows Bitcoin and Ethereum ETFs coming. It's going to send their prize project to the moon, which just isn't the case. Like the ETFs are just a reflection of the broader market, as you and I know, and probably everyone listening. But Yeah, one of the ways I'm going to be tracking these is like looking at flows and volume as a percentage of like what the underlying asset is actually doing. And if you look at Solana and XRP and some of these other things that have come to market, HBAR, they actually look pretty good as a percentage of market cap. Like they've done pretty well, even compared to the Bitcoins and Ethereums of the world. It's just that you're playing in like a much different pool. It's a much bigger pool.
So as you look at the 152 filings out there, are there any that have your attention more than others? Is there anything you're particularly interested to watch as they come to market?
Honestly, I'm gonna be like really boring. Like I could just pretend and say like some token I'm really excited about that I'm really not. But like the thing that I'm most excited about is these. I'm really excited about the active basket and index type products that are going to come to market. There's going to be a whole bunch of different ways that people can do this. I'd be interested in some of the, ironically, some of the covered call products. That'll give people some idea, like to especially with staking, you can get some yield on these other line things. But really, it's the basket products. Whether I think we're going to see some active products where they're going to use fundamental based analysis of these chains, looking at their revenues and fees and what they're generating, and overweighting things that way, or like creating a basket. Like a lot of people might already have Bitcoin exposure in their ETF portfolio and maybe even ETH, but like I don't know how to pick anything else when you start going down. So maybe I want somebody that's just going to be picking altcoins, and we have a couple filings for that. So I think both passive and active products in the basket space is what excites me the most for coming to market. And I think that could be, I know you're pretty much in agreement with me on this. Like I think that's the biggest growth area. All these other coins, like I think, sure, we could see a couple that have like an ETF that becomes huge because the underlying token does really well and there's a lot of demand for that ETF and it's very successful for the issuer. But I think like as a category, as a group, if I had to pick one thing, it's the basket index products, which has been my view for a year now at this point. So it's not controversial. It's not as fun or spicy, but that's what I'm most excited about. Is there anything that jumps out to you when you look at all these filings?
Well, a couple things. First, as it pertains to the basket ETFs, I'm sure you saw this, but one of my 2026 ETF predictions is that the crypto index ETF category is going to go from, last I checked, it was like 1.7, $1.8 billion. I think it's going to triple to 5 billion by the end of the year. And I think you hit the nail on the head. You look at this long tail of crypto assets that is coming to market. Financial advisors in particular don't want to be in the business of trying to pick those winners and losers.
Nope.
And so I know this is cliche, but they're going to go, you know what? I'm going to take the easy button approach. I'm going to buy a basket of these and we'll see what happens. It's an emerging category overall. They want exposure to crypto, but they don't necessarily know how to go about doing it. And so I'm highly bullish on that category, as clearly you are as well. I mean, in terms of some of the other filings that I'm watching, I'm actually really interested to see how these Morgan Stanley spot crypto ETFs do, right? So they had these filings in January for spot Bitcoin, Ether, and Solana, I believe, ETFs. And I think that caught some people off guard just because obviously those had been out in the market for a while, obviously, especially the Bitcoin ETF. And so the question is, well, why are they doing this now? And I think, as you know, in the ETF space, distribution is king, and Morgan Stanley has that in spades. But even though they have that distribution, I think it'll be interesting to see what type of assets these products can accumulate and how quickly they can do that. So I don't know. Did those filings surprise you at all? I thought that was a big one.
Yeah, before I even comment on the Morgan Stanley ones, I want to add something else to what you're saying about the index products. There are, as somebody who covers ETFs, obviously I believe in passive management and the benefits of indexing, but like there are areas, high yield bonds, things like that, where it makes sense to pick an active manager. And I think this area specifically is one where it will make a lot of sense. So I hope that we see some issuers come to market with more of those things. I know there's plenty of them in the SMA type wrapper, but not an ETF wrapper. As far as Morgan
Yeah,
Stanley
I
goes,
100% real quick on that. I completely agree. So when I say basket approach, and
yeah,
for
yeah,
my
yeah.
prediction, I'm using crypto index ETFs, but 100% agree. I mean, I think I would put active ETFs in that bucket as well. And what's interesting there is I think there's a real opportunity for alpha, right? In
Yeah,
this particular
agreed.
category, you're going to see a huge dispersion of returns among active managers in this space. And so that's going to, as you know, attract assets if we have a manager that's really knocking the cover off the ball. So anyway, I agree with that.
Yeah, yeah. It's going to be fun to watch. I can't wait, honestly. That's why I'm excited about it. But the other, I honestly probably should have said the Morgan Stanley ones, because this was the first time I was genuinely surprised by something. I was one of those people because, I mean, you go back to October, you tweeted this out, that they didn't even allow their advisors to buy any of these ETFs, and then all of a sudden, what, 2 months later or 3 months later, they're filing for their own. One, this is kind of something I thought would happen, right? I don't think if you had asked me to pick an issuer that would do this, or somebody with massive distributions like the trillion plus that's at Morgan Stanley with their advisors or brokers or whatever term you want to use, the wirehouse, I'm not sure I would have picked them. They had, I think, 2 ETFs under the Morgan Stanley brand name before they filed for these 3. Most of the other ones were under like a lot of these other products that they have, like Eaton Vance and some of the other brand names. So like, for them to do it under the Morgan Stanley brand name, this is a big deal. And I think a lot of people were responding to me like, why is this surprising? Like, of course everyone's going to do it. And I'm like, if that was the case, like, I don't know. So yeah, I'm surprising, and I will be fascinated to watch how the demand goes. We've seen plenty of banks, people with distribution that have launched products, some like near zero fee exposure, so like large cap equities, and they still don't hold a candle to the S&P 500 type ETFs from Vanguard and iShares and State Street. So it'll be interesting to see how the uptick in demand goes here. JP Morgan is the example I think of. They've launched a lot of like beta type products before they started getting into the active space that did pretty damn well at like garnering assets, but not in the same way that they've done with, JEPI and JPST. They're actively managed products. So it'll be this is an area that I'm going to be watching very closely once these products launch, because as you mentioned, in the ETF world, pretty much anywhere, distribution is king. So if you can just say, all right, you don't buy the iShares product, buy our product, and you have, $1 billion in demand from your current advisor network, that's a pretty easy substitution.
Is there another big asset manager out there who you think could make a move similar to Morgan? Somebody like Charles Schwab comes to mind, but obviously they're going to offer direct spot crypto trading, which I actually want to ask you about that in a moment. But I guess I never would have thought we would see Morgan Stanley coming to market with these products before like State Street, the
Yes,
third largest
agreed.
issuer, right? It's just, it's unbelievable. But is there anybody else that comes to mind for you?
There's only one, there's like one big bank that would be more surprising to me than Morgan Stanley, and it would be JP Morgan doing it. And they've done this before in other areas, but like considering Jamie Dimon's view of this space, that would be absolutely fascinating. But I don't know. We'll see. People were like, of course they're going to do this. They have the distribution. They can just put their clients in it. And I'm like, if that's the case, then everyone would have their own S&P 500 ETF. Everyone would have their own like aggregate bond ETF. And that's just not the way things work right now. There's benefits to like a larger pool of assets because of, you get liquidity that kind of spins on itself. AUM goes, flows go, and there is a benefit to having a really large ETF product. But I guess, I don't know, maybe this is going to be changing the way that the ETF ecosystem works, particularly. I mean, you've talked about this in your other show. I mean, we're getting ETF share classes. I mean, that's going to upend the landscape of how we look at what's going on in the coming years. So maybe something like this, we'll see, like, maybe they think there hasn't been enough time for, iShares and others to really cement their groundwork as the number one option. But I don't know. We'll see. I think this is risky, but I kind of like it. You're taking a shot here.
Speaking of iShares, I know I asked you this last time you were on here, but are you surprised that BlackRock still hasn't pursued any crypto ETFs beyond Bitcoin and Ether? Does that still make sense to you? Or do you think at some point they'll capitulate and we'll see some additional filings?
So I'm going off of talking to people there, and they seem to have decided that they're sticking with these two, and they think these two are going to be the leaders. And these two, I mean by Bitcoin and ETH. I think I said last time I think they'll eventually launch some sort of basket product, maybe even an active product like we were talking about. I am a little surprised they haven't gone the Solana route, because I feel like it's kind of now, those are the big three, right? So in my mind, it's like Bitcoin on a tier its own, then Ethereum, then Solana, and then like everything else for the most part. I know that's not actually how market cap shakes out, and necessarily XRP at times has been larger and things along those lines. But you talk to anybody in the space, and it's like Ethereum versus Solana being used for the consumer applications and things along those lines, and Ethereum being used for like institutional DeFi type stuff. And I think of those three things as like the pillars of what I view as the crypto landscape at the moment. That's my personal view. So if I had to say, I say I'm a little surprised they haven't even bothered to even try to compete in the Solana side of things. But obviously they have reasons internally why they're not doing it. And they won on Bitcoin and ETH. So if they do come in, maybe these other issuers should be thanking their lucky stars that that iShares has decided not to compete here yet.
Yeah, and I think I was wrong on this. Last year I was beating the table saying BlackRock was going to come with spot XRP and spot Solana filings, and for some of the reasons you just described, when you look at Solana, I'm just surprised that they've decided to sit this out. They had massive success with the spot Bitcoin and spot Ether ETFs, and so I would make the argument, even if they don't believe in something like XRP for whatever reason, and maybe we've talked about this before, you know what they do believe in? Making money, right?
Yeah.
And so you look at these categories, and I actually want to ask you about just demand for spot XRP and spot Solana ETFs in a moment, but it seems odd to me that they would just cede these categories to competitors. And if nothing else, I would have looked at them as like a bridge to the index-based products, which are now on the market. And as you know, BlackRock, I mean, when I think of them, they have active management and everything else, but they certainly have a very strong presence around index-based ETFs, right? They're a clear leader here, index-based on the equity side, right? Index-based on the fixed income side. And so it seems natural to me that they would do the same on the crypto side. And I don't quite understand the strategy here. I think you're right in that ultimately they probably will roll out an index-based product, but they're waiting a long time here. And they're giving other issuers a lot of oxygen to build their lineup out.
Yeah, I think I wonder how much of it has to do with the fact that they are building products and they have chosen from a business perspective that they are going to build on Ethereum. They believe in Bitcoin and they're going to build on Ethereum, and they've chosen Ethereum over and over and over again compared to these other chains. So maybe they're like, from our perspective, this is what we're choosing. But again, if you look at, I mean, theoretically, I completely get your argument. Like maybe you just launch a single asset and then try to basket ETP that holds your other single asset ETFs. Like that's an easy way to just bundle all this up. You see plenty of issuers doing this across the board in other areas. So if I were an issuer, that's what I'd be considering doing. But they're obviously not doing it. They haven't even filed. It's not like they filed and they're dipping their toe in the water. There's no filing. There's no anything that would indicate that they're going to launch one of these products. But like I said, I wouldn't be absolutely shocked if they if ultimately launch something like this. If I had to pick one, like I said, I'm with you. I think they will launch an index product at some point.
Yeah, I just don't see how they can remain on the sidelines there because, like we said, I think this category is going to triple this year. It may even far surpass that. And at some point, the numbers get big enough where it's going to be meaningful to them. Okay, in terms of the ETFs that are already on the market, again, we now have spot Bitcoin, spot Ether, XRP, Solana, Chainlink, HBAR, Dogecoin, Litecoin. We have the index-based ETFs. I think that's everything. I may be missing something there, but you mentioned flows like into the Canary XRP ETF and some of the others. I mean, is there anything that stands out to you overall, whether flows into or out of these ETFs? And this can be over the past several months, or if you want to talk about since inception. I'm just curious, as you look at all the products on the market right now, what stands out to you?
Um, the real honest answer is like nothing really stands out to me, which is a little less fun. I mean, honestly, if I have to pick one thing that kind of stands out, it's probably that the Doge ETFs have gotten almost no interest whatsoever from my point of view. So I talked about being surprised. I mean, HBAR, it's not like shooting the lights out, but it's done decently well. But then XRP, I will say XRP has surpassed my expectations. But I guess it shouldn't have. I had pretty high expectations just because everyone I know who knows nothing about crypto, like they either know Bitcoin or XRP. So like I know people who like know absolutely nothing about crypto or any of this technology or blockchain, and they're just like, oh yeah, XRP. The banks are going to use XRP, and I'm just like, so I guess there's like a retail demand out there. Sal Gilberti at Tucrium, those guys, they love XRP. They filed for an crypto ETP that I had honestly never even heard of last week, XDC. But yeah, nothing really is all that shocking to me. If you had asked me to pick, I would have guessed like the largest ETF would have been a Solana staking ETF. And of all those ones you mentioned, you have the Bitwise Solana staking ETF that's over 800 million. So it's, I guess, the category as a whole via the XRP ETFs, and the fact that it's like really distributed. Like Canary is the largest at like just under 400 million, but like you have one from 21 Shares, Grayscale, Bitwise, and Franklin, all over 200 million in assets for XRP alone. So I mean, if you look at it as a category group, XRP is doing better than Sol. So I guess that's a little surprising to me because, like I said, I think of Bitcoin, ETH, and Sol as the top three, but XRP is a larger market cap, or at least it was last I checked, and so I guess maybe I shouldn't be that surprised by it.
Let me ask you this. In terms of the longer term demand for all of these single asset spot crypto ETFs, as you know, over the next several months, as I was mentioning earlier, Charles Schwab is expected to offer direct spot crypto trading to clients. Obviously, Fidelity already has several options here, and there are several other brokerages that are out there, doing the same. And I'm not expecting these firms to offer, spot Dogecoin trading anytime soon. But my question is, as these brokerages expand direct crypto access, do you think that could crimp demand for single asset spot crypto ETFs?
Probably, maybe a little bit, but I don't even know. I think a lot of people, I go back to this, like when I looked at what was happening with the ETFs, I thought for sure it would crimp demand on things like MicroStrategy. It did the opposite. I didn't understand why there would be so much demand for leveraged single stock ETFs. You could just buy single stocks on margin. Like what is the big deal? And still look at the AUM that has gone to those leveraged single stock ETFs. So maybe yes, on the margins it will like decrease demand. I think particularly depending on how they do their custody arrangement, because if you're an ETF, you're paying whatever the fee is on an annual basis, right? If you're just buying the underlying asset, what matters really is the spread and the fees that you're paying for that asset. But if you're going to hold it for a long term, even if those transaction fees are high on a place like Coinbase, if you're planning to hold it for years, over the long term, it's actually cheaper to buy the asset, particularly if you can custody it for free. So I think it'll be interesting to see how that plays out. But I think there's just plenty of advisors that are just used to buying ETFs. That's the way it is. So that's the same reason I had plenty of people telling me when the ETFs launched that our forecast for immense demand for these types of products is overstated, because anyone who wants exposure to this already has it. Anyone can open a Coinbase account, anyone can get exposure. And it's just like every time somebody says something like that, I'm like, yeah, but just clicking a button is a lot easier than opening a new account. And there's a lot of regulatory things that people have to figure out. But it'll be interesting to see. I mean, if advisors are leveled with the option of just buying it directly with Schwab and custodying with Schwab, or buying the ETF on the Schwab Advisor Network platform or whatever it's called, it'll be interesting to see how it plays out. But yeah, I don't know. I'm sure it will impact a little bit. But then again, it goes back to kind of what we were talking about before. I think one of the biggest categories is going to be the basket products, and that's still going to be something that people are going to look to buy. So you go for these passive or active or whatever you're talking about, there'll still be demand there.
Yeah, I think it really depends on how seamless and integrated somebody like Charles Schwab's makes the buying experience for spot crypto. In other words, I think an advisor or an investor, they want to go in there, they want to buy crypto and hold it right next to their Vanguard and iShares ETFs. They want consolidated performance reporting, consolidated tax statements. It needs to be seamless in that regard, I think, to supplant or really meaningfully negatively impact spot crypto ETF demand. But to your latter point, we keep saying the same thing here. That's, again, why I'm bullish on index-based or actively managed crypto ETFs, because you're right. No matter what these brokerages do, I mean, they can offer crypto SMAs, but I think people are going to just use the easy button approach if they want a basket or actively managed exposure to crypto. So I think I agree there. Real quick, going back to your comment on Dogecoin ETF demand, I've said for a long time, and this actually gets us back into this 152 spot crypto ETF or crypto ETF filings that are out there. Something like Dogecoin, the people who buy that, in general, these are degens, and they already know how to access this. They already have digital wallets.
Agreed.
They don't need an ETF to access this, that type of coin. And I think that's going to be a lot of these other coins that are much further down the market cap spectrum. I know Dogecoin has a much higher market cap, but I just think that's an asset where, again, if you want it, you already know how to get it, and you're doing it, on chain or through a digital wallet. So Yeah, that's why I don't expect much demand at all from something like the Dogecoin ETFs. I don't know if you have any thoughts on that.
I mean, first I would say it'd be a lot more fun if we like really disagreed on all these topics, but I feel like we haven't really disagreed on anything aside from maybe BlackRock's positioning in this space. But yeah, I'm with you. I actually was like, I remember talking to the guys at Bitwise. I was like, I don't think anyone's going to buy this. Like, but maybe I'm wrong. I've been wrong plenty of times before. But I mean, literally no one has bought like the Doge ETFs. So it's like I had pretty low expectations, but I thought maybe they could get to a point where they're slightly profitable. But I think BWOW, which is the Bitwise one, yeah, it's under $1 million in assets right now. So, I mean, that's like near zero demand. Granted, it only launched at the end of November, so we're still pretty early, but yeah, I mean, it's very minuscule. But I'm with you. I will say there are like tokens and chains that are launching that have like real potential use cases down the line with specialized like they're focusing on a specific niche, things like Chainlink connecting DeFi and TradFi in all these different ways. And I think those, even if they're smaller in market cap, could be more like what's the word? I guess appetizing for advisors and investors who would be buying ETFs than things like a Doge or a Shiba Inu ETF. So I think that like what the actual chain is doing and stuff like that will impact the sort of demand, if any demand, it will say.
The other aspect here, which you're well aware of, and it's something that I've talked about a lot over the years, is what I call client statement risk. And so financial advisors, they're the biggest driver of ETF flows. And so let's take Dogecoin as an example. If you're a financial advisor and you have a Dogecoin ETF show up on a client statement, and this is not a state, I get what Dogecoin is, and I'm not here to debate that whole community around the value. I'm just telling
Sure.
you, if you're a credible financial advisor and you have a Dogecoin ETF that shows up on a client statement, it's like a flashing red light saying, please fire me and go find another advisor. And so that's client statement risk. And I think that's going to be the case for a number of crypto assets. If you get clients asking questions on it, or if they would ask questions as an advisor, you're probably not going to put that in the portfolio. But in any event, okay, a few minutes left here. Looking ahead, any other big crypto ETF stories you're watching this year? I mean, we talked about we're sort of in a lull right now, but is there anything we haven't covered? Anything that has you particularly excited? Anything else you're watching?
I mean, the one thing I'm really watching is what your last episode was with Alex Thorne. I mean, that's the one thing that matters for this space more than anything,
Clarity
right?
Act.
Yeah, some sort of regulatory certainty that comes in. We got some regulatory certainty when the ETFs launched and a few other areas that came out of the SEC, but theoretically, all this stuff can be undone by a different SEC administration or CFTC administration. So getting this down to like the letter of the law is going to be important for this entire space. Though I think it's I don't want to say irrelevant, but it's like a far less relevant for something like Bitcoin. I think clarity in these regulations is going to be very important for some of these other chains and these altcoins we were talking about that are trying to do things that are TradFi adjacent in the on the DeFi rails. And there's a lot of questions around like if you have, an admin security control of like this actual protocol, is that actually truly decentralized if somebody can go in and actually change something? And that's a lot of the things that are being questioned. And then so, yeah, I think for this space, the next big catalyst will be a potential approval or signing of clarity into law by Trump. But again, like I said, obviously rising tide lifts all boats, but this will be a lot more impactful for the coins other than Ethereum and Solana other than Bitcoin. So that's the one story that I'm really watching. I can't think of anything else for the most part. I mean, Grayscale's looking to IPO, I believe. I've seen there's BitGo is IPOing today, I think. So there's a lot of things in this space that are happening. So watching like what's going on the equity side of things as these companies are actually able to IPO now, which would never have happened under Biden or a potential Kamala Harris presidency. So those are the two things, really, clarity and the equity side of crypto-based exposure.
Since we're obviously focusing on ETFs here, what, if any, ETF impact is tied to the Clarity Act? Is it just that this will harden or solidify the rules of the road to where we know what's a security, what's a non-security, who has jurisdiction, and that if we get these codified into law, they can't be pulled back at some point. And so that just gives more certainty to how issuers approach the space, ETF issuers. I'm just trying to think like what's the ETF impact here?
Honestly, maybe some of the bigger issuers will be manner, but like a lot of the guys that are launching products in the space now, I don't think they really care. Aside from like the underlying asset performance, I don't think they care from their perspective. I think ETFs are kind of done, right? Like there's not much else that they won't be able to do. I guess if there's potential issues around some of these underlying assets being considered securities, then that's a whole different animal that we would have to go down. But it really matters for the underlying asset and the performance and actual investment at the end of the day. So you have institutions that are still like, I'm not really sure how this is going to handle. Like nothing is completely settled. Yes, the SEC seems proactive in handling how they're doing these things, but like they're doing it via SEC rules and guidance and things along those lines. That's not a letter of law. All it takes is, another administration 4+ years from now and going back and undoing some of these things that could be really detrimental to the performance of the underlying assets. So there's like pensions, endowments, you name it, that are just still, even if they're, toying with looking at the space, there's still a lot of uncertainty without something like a market structure bill that clarity would provide. So yeah, it's more the underlying assets and the ETF industry itself, I think.
No, that makes a lot of sense. Yeah, just
Yeah,
helping with institutional adoption, comfortability around the regulatory playing field.
yeah. If you go back 4 years, it's already 90% better. This would probably get you like closer to that 100% number. But whatever happens here isn't going to stop people like Rex or Bitwise or some of these other smaller issuers, Vol Shares, you name it, Canary, VanEck. Like they're not going to be not launching these things because there's a lack of clarity from Congress in this. There's already been plenty of clarity that has been added, and I think they'll be fine. And plus the SEC rules and guidance that have come out from Hester Peirce, and it's all looks pretty positive from an ETF issuer standpoint, in my point of view.
All right, real quick before I let you go, last we talked, which I think was in August of last year, last time you were on here, I know you were knee deep in writing a book on crypto. And so I'm just curious, is that still in the works? Is it getting close? Is there anything you can tell us about that?
Yeah, so we've handed over our first draft basically at the end of 2025. So the book should be coming out in November. It's mostly a high-level book on why Bitcoin, what it is, and why people should maybe take it a little more seriously. Largely just because we talk. I'm sure you talk to people in our world, ETFs, asset management, TradFi. There's still plenty of people out there that completely think it's just funny money in space and stupid and don't understand how it actually works. So one, it's like a primer and like this is how Bitcoin works. This is how other it's mostly Bitcoin, and then talking about like why people are adding it to their portfolios for diversification, what it does to a portfolio, and monetary debasement, things along those lines. Just very high level type stuff for people to like. If you're still not taking this remotely seriously, read this book. Take a little while, understand a little bit more, and if you still decide you don't want any exposure to this, that's fine, completely normal. But at least you're not going in without any understanding, because at this point this asset class has become large enough that having zero exposure is pretty much an active decision, which is fine, obviously. But so yeah, that's the gist of the book. So mostly Bitcoin, but we touch into other coins and tokens and protocols, and yeah, we're looking forward to it.
So are you excited for this to come out? Are you nervous to see what the reception is going to be? Is this your first book?
This is my first book. I will say Eric and I were supposed to split it 50-50, but he probably did 60 plus, maybe 70% of the work on this. He's written 2 books before this already. So I got to give most of the credit to him. I was just kind of in there like, oh, this is not the right way to look at this, or like adding my 2 cents, because I'm a little more in the weeds on the crypto side of things. That makes sense. But yeah, he did most of the heavy lifting. So I'm excited. I can't wait to do it. I can't wait to potentially do a podcast book tour and talk about what we were looking at. So yeah, we interviewed a lot of people for our book. So the one thing I would say is we interviewed 50-ish people. So the book is documentary style with quotes from people who are pro, anti, crypto, Bitcoin, you name it, throughout the book.
And again, when is the anticipated release date?
November of this year.
Okay.
Yeah.
We'll definitely have to have you back on here when that comes out, if you're not on before then. But James, always so much fun to connect. We are in a bit of a lull now with crypto ETFs, but I think the year is going to get a little bit more exciting as we move on here. So we'll see how that plays out. Maybe we can check in during the summer or something. But thank you for joining me.
Yeah, thanks for having me, Nate. This is always a good time.
That was James Seyffart, Senior Research Analyst with Bloomberg Intelligence. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. Thank you for joining me.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.